Hello, everyone. This is Matthew Frailey with BreakpointTrades.com. We've been bringing you advanced technical analysis, market commentary, trade ideas, and mechanical trading algorithms like you see here with our 21 SPY and ES mean reversion systems with about 90% winning trades. And of course, over the last year, we have our KISS trend following systems, which are simply pretty astounding. Nothing else out there like it. In fact, I'm going to show you some statistics comparing them to buy and hold, and I think you're going to be pretty impressed. So anyway, it's Wednesday, September 6th, and I'm going to give you an update on the market here. This is our back-end recorder for our website newsletter, so I'm going to get this started. Hello, everyone. This is Matthew Frailey with BreakpointTrades.com. This is the Wednesday, September 6th newsletter. Tonight's newsletter, as you can see, divided into 6 major sections. I'm going to make some brief market comments here, but then we're going to go into some admin stuff. We're going to talk about the KISS systems, and I'm going to show you some comparisons of statistics of the KISS systems compared to buy and hold. And again, I've already posted these numerous times out in the trading community, but I haven't shown these in a newsletter, so those of you who aren't active on the trading community may not have seen these, but I think you're going to be pretty impressed. I'm not going to use the words holy grail, but my God, I mean, getting close to that. And I know that sounds like hyperbole, but I'll show you what I mean. Well, then we'll move into the general market analysis, look at the indexes, what transpired today and what I think is going to happen going forward. We'll look at a few market indicators, a few sectors, US dollar, commodities, precious metals, GDX, and of course we'll follow up with trade ideas. And I did add a few trade ideas tonight. Steve added a few last night. Now, as far as today, the market started with a big old gap down in the morning. Now, the Russell was positive for the first 15 or 20 minutes, but it too lost that ground, and the market really started selling off. It was down strongly. The S&P was down almost 55 points. It's a pretty good down day. It then bottomed around 1 p.m. Eastern Standard Time. I posted a 5-minute chart of the S&P 500 showing a strong MACD positive divergence, along with an intraday bullish break in symmetry confirmation. Plus, ES had come down to that support level Steve mentioned last night around the 44.95 to 4,500, and it bounced off of there. Okay, so for the day, the S&P and NASDAQ lost about 1 to 1.1%, and so far it's been a nice correction since the August-September timeframe, just like we thought the market would go through. Next. So let's talk about the admin things here. So first off, guys, the KISS systems, remember, they're in the systems section. Go to KISS STS tables. And, for example, today you can see XLE got a new smart trailing stop. It moved up to, let's see, 87. The previous one was 85. And this is the 6th smart trailing stop since the system went long on July 11th. Okay. Again, make sure that you have set up your emails, because what's cool about these tables, if you go to this section, you got to go to the favorites area, and there's a checkbox to click to set up your emails. Once you do that, every day, whenever one of your favorites has a new, say, smart trailing stop, you'll get an automatic email notification. Okay, you have to be a subscriber to get that. Okay, so right now you're able to view these tables for free without having a subscription, but eventually it's going to be locked down. So really, guys, if you're just on YouTube, you haven't added a subscription, what are you waiting for? Add a subscription. We're not expensive. I'm sure most of you spend more at Starbucks on $7 lattes a month, than our $50 monthly membership. It's very reasonable for what you get here. You get world-class systems like these KISS systems. And I say world-class, there's nothing else like that out there. Nothing available for $50 a month, all right? Anyway, but make sure to set these up if you haven't done so. Now let's take a look at some statistics. So let me zoom back out. So here is some statistics of the KISS, of the QQQ daily KISS system versus just simple buy and hold. Okay. Now again, pause the video if you need to, but here the table should be pretty self-explanatory. Here's the years. Here's the percent gains for those years. Profit factor, number of trades per year, percent profitable, max drawdown from entry. Now here's buy and hold. You have the Q's, annual gains, losses. This is the KISS versus the index. So basically I'm taking the percent gain from the KISS minus the buy and hold. So you could see, for example, in 2021, the KISS system made an extra 24 percentage points. It made 71.7% in 2020, the KISS system, with 4 entries, and buy and hold only made 47.5%. So knocked it out of the park there. But anyway, when you go through, so that's what on the tables here, but just go through some of these. The KISS system does not beat buy and hold every year, but it beats it on most years. Okay. And especially during bear markets or sideways years. All right. The main benefit really is the very extreme lack of drawdown. So for example, here's the average drawdown. This is going back to 2004, so about 19 years. Average max drawdown is 3.4% versus 18% for buy and hold. So you're looking at a 5 to 6-fold less drawdown that you have to go through, okay? And you end up capturing either the same returns or better. So it's the best of both worlds. And you're looking at anywhere from 1 to 3 to 5 trades a year, 6 maximum here. Well, here's 8 on this year, but that's not a lot of trades a year, guys. Even you have a 401k that's fairly restrictive, that you should be able to do those number of trades in a year. That's not very much. It's almost like watching, paint dry. So anyway, but taking a look at some of these. So in 2022, the KISS system lost 8.7% that year. It had a max drawdown from the entry at 4.4%. Okay, buy and hold lost 33% and had a 36.5% max drawdown. So quite the difference. Which one would you have rather done? All right. 2021, the KISS system didn't make as much as buy and hold, 20.8% for the KISS versus 26.8%. But again, look at your max drawdown. Only took a 2.1% max drawdown versus a 12.2. All right. 2020, KISS system made 71.7% with a max drawdown of 4.1%. Buy and hold made 47.5%, which is a lot, right? But it had a 30.5% drawdown. Which are you going to rather have? The 4% or the 30.5%? Even if the gains are the same, but the KISS system made quite a bit more. It made 24 percentage points more. All right. 2019 KISS system did a little better. 41% versus 37.8% for buy and hold. KISS system at a 2.3% max drawdown versus 11.7%. So you get the point here, guys. And 2008, KISS system made 9.5% in that year, right? With 2 trades, 4.2% drawdown. What did buy and hold do? He lost 42% with 51.5% drawdown. You see the point here, guys. I'm not going to say holy grail material, but the fact you can capture most of the gains or more gains than buy and hold with a fifth, a sixth, a seventh of the drawdown is pretty freaking impressive. Next. Image number 4. So here's another KISS system. This is a half-day system. This is the half-day SPY. Now that's not on a website at the moment, and I have a daily. I don't have the stats in front of me, but so you can see some of the stats here. Buy and hold, the KISS versus buy and hold. Again, you have essentially the same thing here. So 2020, what do we got here? KISS system made 41.2%. Max drawdown of 5.4%. Buy and hold made 18.4%. With a max drawdown of 33%. So again, you can see the same theme here. Pretty impressive. So if you haven't subscribed to Breakpoint Trades, you really should, so you can start getting access to these KISS systems, which you will find nowhere else. All right, let's go ahead and move on to the rest of the newsletter. So item number 5 shows the index sector table, what transpired today and this week. You can see it's been a nice down week, nice down day today, even though, the S&P came 20 points off the lows. S&P closed down about 31 points. It was down about 55 points, but you can see nice down day for the indexes, nice down week for the indexes. As far as the major market sectors, good sell-off this week so far. A couple notable exceptions today: utilities and energy, but they were only slightly up, and home builders up 1%. But pretty solid losses here for the week. Currencies, U.S. dollar pretty flat today, but up 0.5% for the week. That doesn't help precious metals or the market. Crypto's a little mixed here, mostly down though. And commodities, kind of a mixed bag. The index was up 0.25%, crude oil up 1%. I don't like getting political here, guys, but the Biden administration, remember last year, sold a lot of the strategic oil reserves, and they haven't. Why the heck didn't they buy those reserves back, in May, June, July, whatever, April, whenever crude oil was way down there? Why didn't they buy it then? They still haven't replenished it. I don't get it. Anyway, but that was up. Natural gas, copper down. Some of the ags are up, some were down. Precious metals, though, remain weak, and they're weak this week, especially with that strong dollar. Today, we saw the 10-year up slightly, and it's up strongly for the week. 10-year, that has been spooking the market. Next. Item number Next, sorry about that, guys. Something got out of order here. So, item number 6 shows the economic news calendar for this week. Today, we had ISM, which the market was not happy about, as you know. Tomorrow, we have the initial jobless claims, natural gas inventories, and crude oil inventories. So, we'll see how that goes. And let's go ahead and get started with the charts. So, let's talk about Apple. That was one big reason why the market sold off pretty sharply today. Again, market was set to weaken. Yesterday, the breath was absolutely horrible despite the market being up. And today we saw a reprieve. But Apple is a huge weighting on the indexes, as you know. Something like 10, 11% for the Qs, 7, 8% for the S&P. It's huge. Everyone owns it. Governments own it. Pension funds own it. Whatever. Everyone and their brother owns Apple. So when Apple falls, huge effect on the indexes. Anyway, this Apple chart, I made this back in August. It had a bearish break in symmetry, which I talked about. That was the largest pullback since the bottom in January. That set the stage. I said for the initial leg down to be a wave A, and I was looking for a lower high wave B. And so now, looks like that wave B high is likely in. Again, you can see how it rallied all the way to that supply zone. That was a great area to short. Remember I said look to short. Got a little bit above the 50-day moving average. Boom, and a big reversal now. It's got the 20-day moving average below here. We'll see where this goes. Again, a couple options here still remain. Obviously not this one that shows it going right up. I've always supported this wave B lower high. So one option would be coming all the way down in a C, coming below wave A low, probably tag the 200-day moving average here. Or another option would be pull back, form a higher low again, rally up, form a B up here, then sell off or go back to high. So either one of those two scenarios are still valid, but nice pullback there. Next. Image number 8, here's the 2-hour view. Again, you can see how it got into this supply zone. You had some divergence on the RSI. It was a great area to take a short. Nice sell off today. Next. Item number 9 shows the 5 key major indexes with the simple Bollinger Bands. So again, as you know, guys, a couple weeks ago, market got quite oversold. We were below the lower Bollinger Bands. The McClellan oscillators were buried below the lower Bollinger Bands. NIMO was buried. Everything was buried. We were due for a rally, and we got it over the last couple weeks. Okay. So far, though, we ran and got a lower high, and nice pullback so far this week. Next, let's move to the S&P 500 specific chart. So here's a weekly view of the S&P. So again, back in July, we ran all the way up to the top of this channel, and the supply zone was a logical area to sell off into August. It also matched seasonality. Whenever you have multiple factors line up, it's pretty powerful. So everything lined up there technically, seasonality wise, everything. But nice sell off, bounce. So far, we got a lower high here. The big question is this form a lower high and then come down again in a zigzag, possibly all the way to the bottom of this channel or close to it? That is one possibility, guys. Quite honestly, I would love to see that, because that would be pretty good buy opportunity if we got down to the 4250 area, whatever, down in here. We'll see. Keep an eye on this RSI trend line. The first time we bounced off of it, but interesting to see if we break this trend line on the next sell-off. Next, chart 11. Here's a daily view of the S&P. Steve's been showing again. Nice sell-off into August, mid-August. We rallied off this big support area in the 43.25 area. Okay, rallied up, and we tagged this channel line, found resistance there, pulling back so far. Now this 44.50 area is big support. You can see we did bounce off of it this week so far. If we lose this on a closing basis, then we can come all the way back down to this area again. But for now, we're trying to hold it. Next, chart 12. Here's another daily view showing you the same thing. Again, possible. The scenario we still favors is some sort of wave 4 pullback. To me, the thing I favor is a lower high wave B here and down in C. Next, chart 13. Here's a zoomed in daily view. You can see this clean channel. Remember back in July, late July, we tagged the upper channel line, and that's where price stalled. You had RSI divergence, again, seasonality. We were expecting weakness into August, which we got. We bounced off this demand zone. Notice the rally stalled right at the broken trend line of the channel. Back tested it, became perfect resistance. Okay, nice sell off this week. Now notice there is a demand zone here in green. For now, we've bounced off of it, off the 20-day moving average. We'll see if we can hold that here short term. Next, chart 14. Here's the other daily chart showing some of these wave counts. Again, for now, we still view this as some sort of wave 4, which again, it's possible wave 4 low was put in here, or it's possible that this was a wave A down, wave B bounce, and we come down in C to complete the 4 down in the lower area of this channel. Next, chart 15. Here's the KISS trend system for the S&P. Again, it's flat. Okay, it exited back there in early August. Next, image number 16. Here's the 4 time frames we like to monitor. Again, these are very useful. And remember, they're right on the website in the KISS section. But again, we were very oversold a couple weeks ago. You can see the DeMark 13 on the daily. The DeMark 13 on the half day, 9 DeMark on the 195. Everything was set to rally, and we did. And then late last week, we had those A indicators up here. We were quite overbought. And that signaled a sell-off, which we got. We also had a resistance cycle here on the half day. This has played out. Now, we are holding the ATR on the half day here, and we held it on the 130 minute, and we got a DeMark 9 here today where we bottomed. We also have a support cycle here. You see that dot? So there is possibility to bounce here. We'll see what happens tomorrow. You could also see a DeMark 13 on the 78 minute. Next, chart 17. Here's a 2-hour view just showing so far this 3-wave action we've had up since last week. Next, chart 18. Here's a 60-minute view showing us channel. Steve showed this last night. We broke the channel. One area to watch too, if we get a further bounce tomorrow, is for price to stall at this channel line. If you want to ask me, if you're curious on the wave count, it's possible this is a wave 4 bounce, and then we get another sell-off and a wave 5. And if we do that, watch that 61.8 fib around 44.27. Now, if that doesn't hold, that would open up the door for a lot more selling. But watch that area and watch the channel here if we back test it tomorrow. Next, chart 19. Here's the 30-minute or 30-minute view. Again, we've been showing this. We showed this as a completed little 5th wave high there. And that is obviously, after a 5th wave, you expect a correction. And so far we got that. You can see the same channel I discussed. Remember, this channel line would be resistance on a further rally. And again, is this a wave 4 bounce? If it is, then I'd expect another decline here to complete this initial move. Finally, Jabber 20, here's a 5-minute view. So first off, you could see the tight coil we had yesterday's sideways action, gap down today. Now here's an example of symmetry, guys. So the first bounce in the morning was just over 10 points. Again, very strong decline all morning. Then we had about a 8-point bounce there. All right. We had strong MACD divergence at that last low at 1 p.m. So that told you to be on the lookout for a good bounce. Then this first rally up to here, almost 13 points. That was larger than these previous two. That's a bullish symmetry break. So again, if you didn't buy that low there, you could have bought there and still got a trade out of it. You could see price basically rallied back to this is the VWAP indicator, volume weighted price. Next. Jabber 21, here's the triple Qs. Again, as you know, the previous week it bounced off that, it broke that trend line 2 weeks ago, bounced off it as support. Qs are fairly strong here. They're still above their 9, 50, and 20 MAs. Those are your big important areas to watch. Next, Jabber 22, here's the KISS trend system. Again, remember this was long from early March till early August, locked in a nice gain there. And this did go back long here recently. Remains to be seen if this ends up being a whipsaw or not. The smart trailing stop is still pretty wide there, 354.70. Next, Jabber 23, here's the 4 time frames. Again, similar to the S&P. The 130 minute, we pulled back to the ATR where we're trying to hold. You know, we topped out from last week at the mark 13, the mark 9 on the daily, resistance cycle in the half day. Next, Jabber 24, here's the half day chart, showing you the action there. Here's the 78 fib, which we got pretty close to. Next, Jabber 25, here's the 30-minute view, showing this channel that we've been discussing. Nice pullback there so far. Next, Jabber 26, here's IWM, nice pullback. Remember, this was actually up this morning while the indexes were down, and then finally it let loose. So notice a couple things here. You see we had a perfect sell signal on that RSI trend line break. Obviously, really the area to sell was the upper trend line of this ascending triangle that we drew way back in April. So when it was down here, we were looking for a rally up to the top, which we got. This was an area to take profits, guys. Anyway, nice rally over the last week, but notice we got a lower high so far. And convenient, also the moving average ribbon, it had a first bearish squeeze underneath. Those are always an area to watch for a sell-off, which we got here. Here I also added 2 parallel lines, kind of like a slanted head and shoulder, if you could see that. And just something to monitor as well. Next, Jabber 27, here's a 30-minute chart. Again, as you know, last week we rallied off this demand zone. Now we're pulling back. We're basically trying to bounce around the 61.8 fib. We'll see if that holds or not. Finally, Jabber 28, here's IWM 30-minute chart. You can see the clean channel, which was busted right away this morning. We came all the way down. Pinocchio moved below the 61.8 fib and recovered that. All right, guys, that does it for the indexes. What are futures doing this evening? ES futures are down 3.25 points, so not a lot of movement. Next, let's look at some indicators. Jabber 29, here's the VIX. So the VIX, again, last week the VIX was selling off, was below its lower Bollinger Bands 3 consecutive days. That was a warning. That almost never happens. And you can see the VIX was basing here, had a really nice base forming. So once it closed back inside the bands, that was a VIX Bollinger Band sell signal. And so far it's playing out. You can see the previous VIX Bollinger Band buy signals. Next, Jabber 30, here's a chart of the VIX and the VVIX. The VVIX is the volatility of the VIX. And VVIX had come also down to this demand zone. Talked about that last week, bounced off of it. Next, Jabber 31, here's the 60-minute chart of the VIX. The VIX had also come down to this demand zone, bounced right off of that. So far, just a 3-wave action up. Next. Chapter 32, here's the NASI summation index. This is plotted as a cumulative. I'm just showing this this is nothing actionable here, but just showing you the sheer negative breadth. Again, the negative breadth started showing up in 2021, late 2021. That's when we became quite bearish on the market before it topped. You can see it on the indicator here. NASDAQ made a higher high. The NASI made a lower high, and it had crossed down. But guys, even this year with the huge rally we had, this thing was moving down. Look at this, just huge divergence here. Again, you still have that huge negative breadth with a handful of stocks mostly leading the market gains. Next, chapter 33, here's the NYSI with the 9 EMA. Someone asked me about this. This was a great sell signal there in early August, as you know. And recently it came back. It's basically pinching with the MA. It's either going to cross it or it's going to come right back down. But to me, I don't really consider that a cross up yet. Basically, basically a kiss situation where it's finding resistance at the 9 EMA. Finally, chapter 34, here's the NYSI weekly. Remember this system? Gives you pretty good signals. Now, you had an up candle last week, but to me, that wasn't a buy signal. You need a move above the high of one of these candles. So you need to move above the high of last week's candle for a buy signal. And you can see so far the candle's down this week. Next, move on to bonds. Chapter 35, here's high yield corporate. It's been selling off nicely here recently, as you'd expect. Bounced off the 50-day moving average though today. Chapter 36, here's the 2-hour view. I added fibs to monitor, 61.8 fib. The bulls would really want to see that held. It's covered up here a little bit by some of these annotations, but you can see it's right around the 74.15 area. Next, chapter 37, here's the 10-year treasury yield. And man, guys, you can see it's been up this week. The market's been down. But does this chart look bearish to you? No, it looks like a big cup and handle, doesn't it? If this is a stock, you'd be looking to buy a breakout here. If rates break out of here strongly, market is not going to like it. That would likely be that wave C down in the market, into September timeframe. Next, chapter 38, here's TLT, 20-year bonds. And remember, they move opposite of 10-year. Again, just absolute textbook. We broke this channel back here in August, back tested as resistance, got oversold here in mid-August off of this doji. You had a long opportunity here, rallied up, almost back tested again, found resistance there once again. Now for now we had a higher low, but it's still early here. Next, chart 39, here's a 2-hour view. Again, when TLT was oversold mid-month, we had a falling wedge here which played out. Then we had a little rising wedge. Here I added a couple parallel trend lines which we did bounce off of today, but we'll see what this does. Again, remember guys, these rates are extremely important for the market. Chart 40, here's the 15-minute view of TLT. Had a perfect bear flag. Steve discussed that on the weekend, which obviously played out this week. Finally, chart 41, here's the monthly view of the TLT 20-year bonds. So if the 10-year breaks out, what I think may happen is this TLT may go down here in this fifth wave. You can see a clear 5 waves, right? But we haven't made a new low. So if this were to go down, and there's a demand zone down here from 2013. If it gets down into here, rates would make a new high, right? Market would be spooked, but I could see TLT then bottoming in here. Then you have a larger ABC rally. That would probably correspond with some sort of end of year rally. But the important thing is there you'd have a fifth wave low, and that definitely solidifies the bear market in bonds. But I think rates hold the key here, guys. Next. Chart 42, this chart shows you some of the major sectors. I'm only going to look at a few of the sectors. Again, most of the sectors, almost all of them were down today. They're down this week. XLE Energy has been one of the exceptions. With crude oil strong, that's had a good week, though some dojis here lately getting quite extended. Next, chart 43, here's IYT, that's the transports. Had a perfect little rising wedge. Steve talked about that on the weekend. played out the last 2 days for a nice sell-off. You can see also had a bearish moving average squeeze there, playing out beautifully. Chart 44, here's EXPD. That's a transport, something to watch for a short if it breaks this. Next, chart 45, XLI Industrials. This has also got a lower high here so far. Taking a look at a few of the individual industrials. Here's Caterpillar. Still holding up here fairly well above the 20-day moving average. Chart 47, here's FedEx. This looks more precarious. Yes, this could go up and make a new high, but if it loses this area, it could be a short and have a quick hard drop. So here's a short candidate for you. Next, chart 48, here's XLE Energy. It was consolidating here, three-wave pullback, broke out to another high, though we do have a very pronounced MACD divergence now. I don't have it drawn here, but you can clearly see it. RSI divergence. So this may be some sort of fifth wave. Next, chart 49, here's ERY. That's the two-time inverse ETF for energy. If you're thinking energy stocks are going to pull back, this would be a way to play it. Again, possibly working on some sort of fifth wave move. You can see the MACD positive divergence. Next, chart 50, here's the bullish percent energy index. Again, this is reason why I am looking at this area to pull back sometime soon. The BP NER is almost at 96%. That's extreme overbought territory. Again, the time to buy energy stocks were when this indicator was down here in the 25-30% range, and when this gave a buy signal in early June. Not up here. Again, doesn't mean they can't push higher, obviously, but they're nosebleed territory up here. Next, chart 51, here's home builders. Again, rallied up, tagged this upper trend line last week, found resistance there. Next, moving on to commodities, chart 52, crude oil, or this is DBC, continues to be quite strong. Broke out of this wedge there in July, back tested the 200-day moving average. Nice rally since. Chart 53, crude oil continues to power up here. Again, like I said, the Biden administration, why did they not replenish the strategic oil reserves back here in March, May, June, when crude oil prices were 20, 30 points lower? I don't get it. That's stupid government for you. Next, chart 54, natural gas. It's forming this big long base, but so far it's had a pretty good pullback from the upper range of this base from August. Next, chart 55, copper. Stalled here at the 200-day moving average recently, selling off. Here's your bigger trend lines to monitor. If the economy goes into recession, well, I'd expect copper to go down. Chart 56, DBA, rallied off this trend line that it back tested in mid-August. Nice move up so far. Retraced about 50% of that decline. Next, chart 57, Bitcoin. As broke down from that rising wedge the previous week. Still quite weak here. Next, chart 58, Mara. Last week came all the way down to this demand zone, bounced off of it. You had a tight entry here, stop, nice pop, and it's retraced quite a bit since. Next, chart 59, here's the 2-hour view. So first off, last week we had a nice MACD divergence, gave a hard pop. Here I added fibs. So far, bounced off the 61 fib. If you bought it back, that's where to put your stop, right here around the 1160 area. Next, chart 60, US dollar. It's had a strong week. It's now up at the 61.8 fib retracement here on UUP. Chart 61, here's US dollar index. Still very strong. Broke this trend line, back tested it as support. Here, this area up here around the 106.70 or 105.70 area, 105.80 area is your bigger resistance possibly if it wants to continue higher. Next, chart 62, gold. Again, gold with that strong dollar has continued working off. It topped out there in early May with seasonality. We did have a bounce in July with seasonality, but lower highs. Still holding the 200-day moving average though. Chart 63, here's the Japanese yen versus gold. The two tend to be highly correlated. The yen tends to lead, and the problem I had with gold was last week. Notice the yen here is in blue. Okay, gold is in, well, gold color. The yen was declining, making lower lows while gold was moving up. So there was a big divergence there. Now gold's being pulled down. Chart 64, the Swiss franc versus gold. You have the same thing here essentially. Next, chart 65, silver. Nice sell off from that resistance trend line all the way back to the 20-day, 50-day moving average. We'll see if it can hold that there. It doesn't look too hot. Next, chart 66, GDX. Again, no changes. Remember the previous week it rallied off this demand zone, but stalled at the 50-day moving average there. It's pulling back. We'll see if it can form a higher low here or not. Chart 67, here's a 60-minute view with some fibs. So far, we are trying to find some support at the 61 fib. If you bought it into this again, a good logical stop would be around this 28.20 area. Chart 68, here's dust. Steve was showing that last night. That's the inverse ETF. And let's follow up with trade ideas, guys. Chart 62, MITK was a long idea of Steve's Sunday, Monday. Hope you guys bought this puppy. He talked about it yesterday. Look at that gap today on good volume. He likes this one fundamentally. Heck of a move. Chart 70, DKS. Dick's Sporting Goods. We added this as a short the other day. Big sell-off yesterday. A little follow-through today. Chart 71, AMD. Still monitoring this one. So far, price stalling at the upper trend line here. Chart 72, PLL. Steve had it last night as a potential long. Did not trigger over the trend line. Here's a few new setups, guys. Chart 73, Zoom Z. Nice long base, kind of an inverse head and shoulder look to it. One to watch. Chart 74, SVRA, another one to watch. This could go either way. I could see this breaking out. I could see it breaking down. So, finally, chart 75, XLRE, real estate. One to watch here, potential short, longer term if it loses this trend line. All right, guys, that'll do it tonight. We'll see what happens tomorrow. Check on the futures. ES futures are down 1 point. So, again, pretty flat. Have a wonderful evening. Take care.